Hi, I'm Courtney Murphy. I'm a realtor here in the Denver area, and I'm also a certified real estate divorce specialist. And today I'm going to talk to you about real estate and divorce in Colorado. A few years ago, I went through my own divorce, and I know how hard it is during this very emotional time to make such important decisions. And I hope today's information gives you a basis to make some of the decisions you have in regards to any real estate that you may own. In Colorado, an individual's marital status does not have any effect on their ability to buy or sell real estate. Now, this changes once a divorce is filed, because once a divorce is filed, an automatic temporary injunction is automatically in place. Now, what an automatic temporary injunction does is it prohibits spouses from selling any marital property. The only way that marital property can be sold during a temporary injunction is if both spouses agree or by court order. So, what is marital property anyway? Marital property is any property acquired during the marriage from the time it starts until the time it ends by either spouse. It doesn't matter whose name is on the title, whose name is on the loan. It is marital property if it was acquired during the marriage. There are two exceptions to this, and they include an inheritance that was given to one spouse only, or a gift that was given to just one spouse. What about property that was owned before the marriage? Maybe you own a townhome, and when you got married, you moved in with your spouse. Is that townhome marital property? The answer is no. You owned it before you were married. A couple of things do come into play here. Did you add your spouse to the title at any time? If you added your spouse to the title, that becomes marital property. However, if the title is still in your name, that is not marital property. However, the equity gains that were made during the marriage on that property is marital property. Let's look at some numbers so you can understand a little bit better. Okay, let's look at an example where there was equity gains made on a property that was purchased before marriage. Let's say that in 1995, Bob buys a condo for $150,000 cash. In 2000, Bob marries Sue, and the value of the condo has gone up to $175,000. In 2005, Bob and Sue divorce, and the value of the condo is now $200,000. That $25,000 in equity that was gained on the condo during the marriage is marital property, and Sue has a right to a portion of that equity that was gained during the marriage. Now let's take a look at the same situation where there's an equity loss. In 1995, Bob buys the condo for $150,000 cash. In 2000, when he marries Sue, the condo is now worth $175,000. But let's say in this example that maybe the market didn't do so well during their marriage, and when they divorced in 2005, the condo is only worth $160,000. So no marital property exists in relation to the condo in this example because no equity was gained during the marriage. And in this situation, the loss in equity on this condo during the marriage is Bob's to bear. Sue has no responsibility for the loss of equity on the condo during the marriage. Now, when we're talking about whether a property is marital property or not, it's important to realize that we're talking about equity on a property and not value. So let's take a look at an example to explain this point. So in 1995, Bob buys this same condo for $150,000, but this time he takes out a loan of $130,000. In our previous examples, he had used cash. So at the time he purchases the condo, his equity is $20,000. In 2000, Bob marries Sue, and the mortgage is paid down to $120,000. And the value has gone up to $175,000. So in 2000, Bob's equity in the condo is $55,000. In 2005, when Bob and Sue divorced, the mortgage was paid off during the marriage. So they did well. They were able to throw some money at the condo and pay the mortgage off. And the current value is $170,000. So in 2000, the value of the property when they got married was $175,000. It actually went down by $5,000 when they divorced in 2005. But the equity in the property went up to $115,000. This $115,000 in equity is marital property, despite the fact that the condo value went down during the marriage. So let's talk a little bit more about gifts and inheritance. Earlier I had mentioned that a gift to one spouse or an inheritance to one spouse is not marital property, it's personal property. Well, there's a couple catches again here. Once again, if at any time you added your spouse's name to the title of said property, that automatically at that point became marital property. Another thing to take into consideration again are the gains on the property. Let's say you inherited a $200,000 house during your marriage, and when you divorce, that house is worth $220,000. Well, that $20,000 in equity is considered marital property. You have three options when deciding how to split the family home. The first option is definitely the cleanest, easiest way to go, and that just involves selling the house and splitting the proceeds. This may not be ideal for you, especially if you have kids and you want them to be able to stay in their home, which brings us to option 2, which is one spouse buys the other spouse out. If you go this route, you'll need to come up with a valuation and equity in the home to figure out a fair buyout price, which at that point, the spouse who's keeping the home ideally will refinance the house and buy the other one out. I suggest refinancing for many reasons. It's a cleaner break, and the spouse who is not staying in the home could run into issues if their name is still on the loan down the road if they want to purchase a house. Oftentimes it's also court ordered that the house be refinanced. The third option is to keep the house jointly. This can be because you want to keep the children in the home and one spouse is unable to refinance, so you agree to keep the home together. Another reason that people decide to go this route is for tax reasons. The IRS allows a $250,000 exclusion for singles and a $500,000 exclusion for couples on the sale of any home that they have lived in for at least 2 of the last 5 years of owning it. So how does this come into play on divorce? Well, let's go to our example couple, Bob and Sue. Let's say that in their divorce, they decide they're going to keep a house jointly, and Sue is going to live there for the next 7 years until her son graduates high school. When her son graduates high school 7 years later, she sells the house and comes up with $400,000 in gains. Now, because her and Bob kept the house jointly, she does not need to pay taxes on these gains because both of them can take the $250,000 exclusion each and no taxes are owed. Now, had she decided, or I should say her and Bob decided to take Bob off the title and she owned the house solely, she would only have a $250,000 exclusion herself and would owe taxes on $150,000, which can be quite significant. That can be thousands of dollars owed on the sale of the house. Because of the Taxpayer Relief Act of 1997, even though Bob has not lived in the house the past 7 years, because of this act, he can still take the exclusion on the house. This is one of the reasons and one of the things to consider when deciding what to do with the family home, because it can be a benefit to save thousands of dollars when the house is sold later down the road. If you and your spouse do decide that you want to sell your home, the biggest piece of advice that I can give you is to come up with a plan before you even put your house on the market. And what I mean by a plan is decide what you're going to do if the house doesn't sell. Agree on how you're going to handle price drops. Whether you do $10,000 every 30 days, whatever you decide together, put it in writing. You're already dealing with so many things and emotions every single day that deciding this ahead of time can save you lots of headaches. It's no surprise that divorcing couples don't agree on everything. So what do you do if you want to sell your house, but your spouse doesn't want to? But really, at this point, there's really nothing you can do. If you can't agree and decide together, you'll just have to wait until you can work it out with a mediator or the courts. Can you purchase a home before your divorce is final? Yep, absolutely you can. But be aware that you're purchasing it during your marriage, and therefore it's marital property. So you'll want to have an agreement, a written agreement in place with your spouse of what will happen with that property. Do you want to purchase a home during your divorce or shortly after, but you're not quite ready? A great option may be rent to own, especially in a market like today's market where the home prices are flying up. If you want information on rent to own, be sure to contact me. I hope you found today's video useful. I hope I answered some of your questions. I know divorce is hard and you will get through it. Just keep your head up. And if I can be of any assistance at all, don't hesitate to call.